Hey everyone, I'm Charting Man Dan with the Chart Guys. I've been trading the last 14 years. We're going to check in on the broader market in this video as it continues to grind higher in all-time highs. Tesla's still not topping out yet, but we know volatility is coming in the broader market in the near term, and I'll tell you how we know that. Let's get to the charts. Reminder, last week I did a webinar about how psilocybin and cannabis have made me a better trader. I put the link in the comments of this video. Check it out if you have not seen it yet. So how do we know volatility is coming in the broader market? Number one, the ranges are extremely tight. We know tightening ranges tell us volatility is coming, just like Tesla. I was day trading NVDA and GME 2 weeks ago, and I said, I'm going to swap out GME for Tesla because I know Tesla volatility is coming when its sideways range breaks, and I know GME is likely to tighten up a bit from here. So one, likely to see declining volatility, the other likely to expand volatility, and that's how we want to be shifting our focus around as day traders in this market as we scout that opportunity. So Tesla today, or I should say SPY today, the range, we had a range of $2.06. And if you look around, that is the smallest range that we've seen in a long time. The volume was extremely low. It's picking up a little bit right now, but look at how much volume was at the end of the day. At the end of the day, we had 8.5 million shares traded. That's pretty much 30% of the entire day's volume was in the last 20 minutes of trading, and it was still an extremely low volume day. So we know that periods of low volume, definitely normal for the summer, but we're going to see a volume spike. We're not going to see any kind of meaningful pullback. What do you notice here about the spikes that are over the 20-day? This orange line is the 20-day average volume. It's the red days far more often than the green days that are poking up above that average. Why? You can grind up perpetually in this market on these ETFs on low volume. You cannot pull back in any meaningful way without volume. Again, it's just the way the market works. It's not a fair game. And the way that these ETFs are structured and how they trade with each other has a large part to do with that. But you've got to see volume for bears to do anything. So if we want to make simple statements in the market, again, the bulls are in full control. I'm not trying to nail any tops. We can go much higher than I think we can, even if we're overextended in blue sky breakout. When we top, I believe it's going to be a blow off top. I'm going to make a video specifically talking about that some point in the near term future, but this is the melt up continuing. And the simple statement is absolutely nothing changes if daily EMA 12 is support. This red daily EMA 12 has been support now for 5 weeks in a row. We can pull back a couple percent and still be holding it. So just lock that away in your brain. Nothing is changing if daily EMA 12 is support. QQQ, same deal. Holding it for 5 weeks, up at the highs, tiny range, tiny volume, watching for potential daily consolidation. We had a question a couple weeks ago when NVDA and semiconductors top out, which we knew was inevitable for healthy consolidation. Where does that money go? Does money leave the market? Does money rotate into XLF and IWM? In the end, the majority of the money rotated back into big tech, which I did not see coming. But Apple, Microsoft, Google, Amazon, Meta, all hitting all-time highs. And again, just showing you quickly, we got SMH pulled back. It's still weekly bull flags. NVDA pulled back for a couple weeks. And while that was happening, Apple just rips higher to all-time highs. Amazon, again, you get the idea. Google, Meta. So my question is, looks like Meta's put in a temporary top. My question is, when these big techs names like Apple see the daily consolidation that we know will be inevitable, same question. Does the money go back into semiconductors? Does the money leave the market? Does the money go to XLF and IWM? Right now, IWM is trading sideways and still weak, and it's likely going to be CPI on Thursday that is a spark to trigger volatility in the low cap names. SMH, all-time high back in play. Again, I looked at this chart a week ago and said, even though we've run this much, it's entirely possible that this is a weekly bull flag just under all-time high and going to be the fuel for the next leg higher in the markets. I know it seems wild and crazy. How can it keep going up? Do not fight the bulls when they are clearly telling you something. Right now, the people that are looking short are looking for clues and secrets and cracks in the armor. I'm waiting for it to be glaring. Give me the clear signals. Give me the clear loss of daily EMA 12 for the first time. If you want to look at some comparisons, look at these high flyers. So CMG, hundreds of percent, monthly stair step, straight up. What was the signal of the top? This was a climax top. Straight up, huge red day, and from that point, it's been a daily downtrend, and we just hit 5-week lows. So that's an example of what a blow-off top looks like. Now I'm looking at some of these other high flyers. Look at Wing. Wing on the monthly time frame, straight up, 100% plus, almost 200%. Monthly stair step. We have not seen monthly consolidation for 10 months in a row at the moment. We just confirmed a little daily head and shoulders. Is it about to follow CMG into weakness? It sure looks like it, at least in the short term. It's one of the more bearish days that we've seen in the last month. But what's different? We just closed under daily EMA 12 after holding it 1, 2, 3, 4 times in the last 3 weeks. So we can look and say, something is different. I'm watching ANF as a high flyer. Monthly time frame, straight up. Beautiful 4-hour equilibrium. I'm scouting, let's look at the daily here, scouting a lower high compared to 186.45 and watching to see if this sideways range breaks bear. And if you want a video on what's currently this pattern that's potentially shaping up here, go to the balancing scales. If you search on our website, balancing scales, there's a whole video talking about it. But just like INTC is trying to formed a bottom with that sideways move, again, it's the balancing scales. Supply is outweighing demand forever. We go sideways and reach a fair price, and then we snap back. And so watching to see if ANF is going to do the same thing in the opposite direction. Bulls forever, sideways range. We got the sideways range bear break here. Not much follow through, but again, watching for something similar. So these are some high flyer names that I'm watching for some monthly consolidation in, while other names keep staying strong overall. So you look around at the market and there's a good bit of green out there, nothing huge, but there are little pockets where there is definitely some weakness, and CMG and Wing were the 2 weakest names that I was watching today. Tesla. So I've been looking for this Tesla daily consolidation for 3 days now, and it is just stubborn. Keeps grinding higher. The one good thing is that I'm not losing on these attempts, and the reason for that is we start the morning with weakness. So I went real aggressive short Friday morning, and we have a real hard 4% drop. And I know to take some profit because the 5-minute RSI is in the teens, and I leave a runner, and then my runner stops out. And it reminds me of back during this daily range, again, the sideways range that we knew was going to bring volatility when it broke. The thesis of the 3-month higher low had me looking bullish. I tried making bullish entries 3 times in the sideways range. I stopped out, break even 3 times, and then I got the bull break with nice follow through. Definitely sold too early, but lots of follow through that made it a very worthwhile trade. I'm now doing the exact opposite thing. I've tried short. I've stopped out 3 times break even. I did have 1 day maker short thanks to Friday's drop. Tried again this morning. Got the drop, make an entry. Exit a third into the drop. New high of the day. Stop out my remaining position, break even. So I'm essentially, as long as I just keep going break even, I'm going to keep trying, and eventually we're going to get the 10% pullback, and it's going to be a very worthwhile trade. But what it tells me is my short-term technical analysis is better than my longer-term technical analysis because I'm able to position myself in these good spots by being able to take partial profit on the short-term move, but it's the longer-term move not following through at this point. And so right now Tesla is testing this resistance zone. You can see there's a decent amount of price action here, 260 to 265 essentially, and that's just where we pulled back today. If the bears are going to prove anything, we need to confirm an hourly downtrend, fail the high of today, break support. There's a base of support, 242, 243. If that level breaks, we look to hourly oversold conditions. But that's a clear base of support to be watching, and we'll see what tomorrow brings. But in large part, the fact that Tesla is not rolling over is because QQQ has hit an all-time high 3 days in a row. And, there's no fear if the NASDAQ is continuing to grind up at all-time highs. Today we just traded sideways, and then right at the end of the day, new all-time high. So it's in a very extremely forgiving bull environment when the indices are grinding up at all-time highs. Healthcare. So healthcare has a very clear resistance zone at all-time highs. This is the weekly chart. Look at all these rejections. tons of rejections, but it is still a weekly uptrend. Bears won't get a big win unless we break 140.68. Again, this is a tightening range that is going to break later this summer, and volatility will pick up a good bit. Watching for a weekly higher low attempt in the short term. But again, we essentially haven't done much of anything here in the last 4 months. XLF, is this a weekly head and shoulders is the question I'm looking to get answered over the next month. It's absolutely possible. We did just double top to the penny at the bounce high of today, 41.85. Bears need to break 41.30 to lose the daily uptrend as the first step towards setting a weekly lower high. And again, we've just been tightening up for months. So semiconductors have been running for months. Big tech has been running for months. XLF and XLV, the second and third most important sectors in the market. When I say, big tech, I'm pretty much, when I think of the NASDAQ, it's big tech and semiconductors. So aside from them, the most important things in the market, XLF and XLV, they're going to get volatile here. The bulls are hoping, if we're going to get a blow off top, one more leg up on these sectors to all-time highs to give us that last push up potentially. If they break bear, it's obviously going to be weighing on things a bit, but what I do know is that volatility is coming to XLF and XLV probably in August. Could come out of nowhere. Set your volume alerts. We won't see any meaningful pullback without notable volume, but we can get a heads up when that volume is coming in. IWM, sideways, weekly time frames, just in equilibrium. So I've got a risk-free position. I say quotations because with the swing trade, it's never truly risk-free. We could always get a big gap down, but made an entry on the 17th, sold some, stops under 197, where my break-even is. If it breaks bear, the IWM sector, the Russell 2000 is going to be a decent spot for bears. Clearly, again, just sideways for months, nothing going on here. So all these sectors that are sideways for months are going to see volatility pick up this summer, later this summer. CPI is likely going to impact IWM. I'd like to see another leg up. And if we are going to continue tightening up, possible to do so into August. But if we get one more leg up, that gives the bull some decent space above that recent low. Crypto stocks, so still watching this tightening range on coin. Coin's got a weekly tightening range. Guess what? We've been tightening up for months. So we know volatility will be coming here eventually. Again, there are previous times where we got real tight in crypto stocks that led to big breaks, more so in the miners than in coin. But just watching how it tightens up as Bitcoin tries to put in a short-term bottom. But coin, all I care about right now is 236 resistance and 207 support. And right now we are $16 below resistance and $13 above support. So pretty much in the middle of that range. But again, you look at names like MARA and you go to the weekly chart, just sideways. When's the last time we looked like this? Back here. And then we got a month of follow through on the break. And now we're tightening up again. Volatility is coming. CLSK weekly chart, this sideways range is going to break. We are approaching the support zone, so I'll be interested to see if there's a low risk trade to try and make off of support. But I'm being really patient in crypto right now because it's clearly the weakest sector I'm watching, and there's so much strength elsewhere still. The dollar, watching for a daily bounce to try and shape up. Again, bigger picture, monthly equilibrium. Expecting a lower high to be set, but it's not convincingly being set yet. We got a weekly tightening range. It's possible this weekly tightens up for a while. If it breaks bear, we zoom out and we look for the monthly tightening range. But this is going to have implications on the metals and the miners. We look at the metals, big bull move to end last week. Simple statement, if gold weekly EMA 12 is support, bulls are just fine. We just built a base of support. Stops can be moved up under that level for swing positions as the bulls try and make their way back to all-time highs. Gave back Friday's move. Silver, same deal, held weekly EMA 12. Nice base. Bulls in full control as long as weekly EMA 12 is support. It held here, here, and now here. Something's got to change. We will clearly see it changing. Not changing yet. Oil, watching for a monthly lower high. There's a lot of time left in this monthly candle. Oil is potentially going to tighten up through the summer. So it would be great if all these things keep tightening up into August, we're going to get real volatile to start Q3. Nope, we're in Q3. Q4. So again, what does that mean? It means I'm trading less. It means I'm more patient. I'm more picky. And I'm waiting for volatility to pick up in the market if I'm going to start using more capital and trading more aggressively. So oil, if we're going to set a monthly lower high, bears will need to confirm a daily downtrend. We only just started pulling back, so we would need a lower high and lower low. So not any sign of a monthly lower high just yet. Still holding daily EMA 12, but keeping an eye out for weekly consolidation. Keeping in mind this move came straight off the lows. Natural gas is all bears. We're back down to testing the adjusted lows. It did hold initially, but again, bulls have not done anything on the longer term time frames in years on this chart. Not fighting the momentum. And that's it. In the short term, watching for daily consolidation in our big tech names that have been in blue sky breakout. I'm not shorting those names. I'm not trying to nail the top in the blue sky breakout big tech names, but I'm observing where does the capital go when those names top out? Does it remain healthy? The number one reason that I've been able to stay long this market, I think it's been 14 months now. I think last May I put out a video saying I'm now ready to say that we're bullish. 2022 bottom looks set. And I've been able to stay long because, number one, I'm not trying to nail the top. I know that I will not nail the top. It's very likely, and I ditch that expectation. And so that keeps me from constantly, at the first tiny sign of weakness, jumping in short. Again, when all major sectors hit the low of the day at the same time, QQQ, XLF, XLV, I'll jump back in hedges again. But in the meantime, I'm just not fighting this momentum. And again, the things that are helping me is observing that it's always healthy rotation. Every pullback that we've gotten, including monthly consolidation over the last 14 months. And again, just letting go. Ride the momentum and the trend. If we're going to put in a long-term top and we're going to crash like some people are talking about, there'll be plenty of downside. There'll be weeks where we hit all major sectors at the low at the same time. We don't gotta nail the top. And again, just as I mentioned, you can be scaling out to take some profit if you want, but if you go all cash, I talked about that other YouTube account that was talking about going all cash and where they, I don't know what their holdings were, but we can drop 9% to getting back to where they sold. So it just puts you in a completely handcuffed position. All right, do good things. Hope you had a great weekend. And let's see if we get some increased volume and volatility tomorrow, certainly compared to today. But again, eyes on CPI this Thursday. Harvesting my favorite potatoes, purple Vikings. Wait till you see these bad boys shine. I just realized I pulled up a snake with them.
Again, none of these have been recorded yet, but we're hoping to change that.